today I've been asked to talk about our journey to going public. By way of background, the company had started in 2001. We had raised over $150 million in enterprise capital. We had had 6 rounds of financing, and we were the first to enter into this space. And we had had a number of conversations with strategics, both inside of ophthalmology and outside of ophthalmology, but in the end we had trouble agreeing on a price. So with that, we decided to take the company public. And we did so on June 25th, which ironically is the same day, 3 years later, that we got FDA approval. So June 25th is a big day in Glaukos' history. And we did so under on the New York Stock Exchange under the ticker symbol GKOS. So in terms of getting ready for that day, there's a lot that went into it. And in fact, we started preparing for this in early 2014. And with that, you have to first select a banker. We decided to go with a syndicate of 5 bankers. You have to look at getting board members. Since you're going to be a public company, we expanded our board seats. Timing is a big thing. When do you go out? I think we did a good job. We threaded the needle in terms of going public in June of 2015. There were 3 other companies that went public that day, and I think 7 that week. And you also have to prepare the S1 document and lots of documents and getting prepared for that. And we did that over a year's time. And then, of course, there's the Roadshow. And it was everything and more that people had told me about it. I talked to my good friend Jim Mazo, who had warned me that it was grueling, and it was worse than grueling. It was tough. We met with 140 investors over a 2-week period of time. I think we went into 9 cities, jet setting all over the place. You get tired of hearing yourself talk and repeat the same story. But we had a good roadshow, and that led to us pricing $3 above the range. We had given a range of $13 to $15. We priced at $18. It was the first time in 19 years, I've been told, that a med tech company had priced $3 above the range. And then with the opening, the first sale went at $29.11, and we closed the day at $31.20. So just shy of $1 billion market cap. So that was an exciting day. I think you can see by the picture here. There you have the executive team and some of the board members. We were pretty excited. That's our chief financial officer in the back with the condor arms up in the air. Gil Kleiman was there, and it was a very exciting day. And because we did price higher than that, and we were oversubscribed, we were able to raise about $30 million than we had planned on. And that's obviously a very positive thing. Wall Street is really looked very favorable on the category, MIGS. Here's a quote from one of the analysts that came out as we went public. And they have definitely bought into the space, the category, as well as the company. They seem happy with our product portfolio and that we have a number of products, not just one, and certainly with our leadership team. And that continued on even through the IPO. This quote coming from an analyst who attended the AAO meeting, and they're very bullish on the space. And I think that has been a very positive thing, not only for Glaukos, but for others as well. This has led to a couple key acquisitions, Aquasys by Allergan, Transcend by Alcon, and I think that our success has helped to lift the whole category up. And where glaucoma was kind of a backwater disease entity, maybe from a surgical perspective at least, today it's not. And we feel very proud of what we've been able to accomplish. So moving forward, we're taking these funds and we'll continue to invest in R&D. I think you'll see additional products coming from us, products that we feel that will help both the patient and the physician and to truly transform glaucoma therapy. Thank you.